Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. Bloomberg is reporting China will propose easing some restrictions on canola products in exchange for relaxed tariffs on Chinese EVs. The report says Chinese authorities plan to discuss reducing levies on industrial products from China. Canadian officials say they hope to ease trade frictions, but played down the prospect of a quick deal on EV tariffs. U.S. consumer prices in December rose 2.7% from a year earlier. The report marks the first complete look at inflation trends in months. High prices and a cooling labor market remain the top concerns for Americans. Price gains were led by increases in the cost of shelter, food, and energy. The report caps off a year in which inflation gradually eased but remained uneven across the economy. McDonald's of Canada is freezing the price of some of its items for 1 year. A small cup of coffee, for example, will stay $1, and the price of McValue meals is actually being dropped to $5 from $6. The fast food chain says Canadians are facing challenges and are insecure financially. Adding the freeze is what customers are looking for. In recent months, Tim Hortons, Wendy's, and Burger King have all introduced meal deals or small combos. And looking at the markets, the TSX still in the green, just hanging on right now. It's up by about 0.1% south of the border. We're looking at, they were up to start and then have since gone the other way. You can see the S&P 500. Maybe this inflation number's not good enough for everybody. S&P 500 off by 0.22 after hovering near 7,000. Dow Jones also down 0.64, and the NASDAQ is off by 0.18 right now. Stock markets are trading around record highs, if not at record highs. Let's get more on this and an overall outlook for the markets as we're joined by Jerome Haas, partner at Lightwater Partners. Jerome, thanks as always for joining us.
Thanks for having me, Roger.
Let's talk about the TSX right now. Great year, outperformed south of the border, and again this year it's off to quite the start.
Yeah, it's been a very punchy start to the year. I think we're up about 3.5% to 4% in Toronto, a little less so south of the border. But, as January goes, so goes the year. And so it bodes very well for 2026 going forward.
Now, I mean, I know we like to say that with January, but this has kind of been, this last year has been a year of the sayings don't necessarily hold true sometimes. We saw in September, we didn't really see much of a Christmas rally, or a late one, I guess. Are there reasons to believe that we can follow that one this time?
Well, it has been a more muted January effect in that some of the losers or the laggards from last year have not vastly outperformed this year. We've seen continued performance from the golds, and the banks have done reasonably well this month too. So it's continuing on what we saw in 2025. But that being said, I think the banks are at 14 times valuation on average, and analysts are looking for about 7% growth this year ahead. So that's a relatively muted outlook for the banking sector, which is, a big sector within the TSX. Gold continues to show strength, but you kind of go, where's the leadership going to come from in the TSX? And that's the interesting question.
And where are you looking then?
Well, we always look at the mid caps. We honestly don't own anything in the TSX composite. We tend to look at the mid caps, which tend to be undervalued and under researched as far as we're concerned. And they were laggards last year, and so we continue to see some value within those names.
Now, when you say laggard, what were they behind last year?
I'm going to guess I think the TSX was up 28, we're probably up about half that. It's still a reasonable year, but it clearly lags the main index.
And are you seeing opportunities then this year because of that?
Yeah, we always see opportunities within the mid-cap space because we just think it's a very inefficient segment of the market, and so we're always touting mid-cap stocks.
And what are you using? What are you helping with your decision making on the mid-caps? What are you looking for in them?
Well, sometimes it's valuation. Sometimes it's just a compelling story, bottom-up story, and sometimes you think that there's a situation where the analyst or the investment community hasn't fully embraced the upside of a stock, and so sometimes a stock that may seem overvalued actually has huge potential upside to it still. Other times there's a stock that trades well below its target price of the analyst, and there's value in that too. So it really depends on individual stocks.
And what is it you think that people shy away from with the mid caps?
Well, it's a structure within Canada. To be honest, every bank has a compliance department, and if you're an investment advisor and you invest in something that's not on the compliance official list, you're going to be harassed by your compliance department until you throw up your hands and say it's not worth it. That's why we've seen an outflow for the last 2 decades in mid-cap and small-cap stocks within Canada.
And is that making it harder for you? Or are you looking where they're going? Are they going south of the border then?
Yeah, I mean, you look at, when we were younger and graduated from university, you wanted to make your money. You got excited about micro caps and small caps because you could see, friends would talk about 5-baggers or 10-baggers. Nowadays, kids graduate from university and they start investing. They want to have a sliver of a mega tech in the U.S. because they view NVIDIA or Google or names like that or Tesla as the place to invest. And they're not really that interested in investing in the Canadian market, and especially the smaller to mid-cap space.
Which offers up some opportunities. Are there certain sectors you're focusing on or just across?
No, we look at everything. We tend to avoid the resource space, but we do like oil and gas, and so we do have exposure to that. But again, it really tends to be bottom up rather than any particular sector that we focus on.
And you got a couple of ideas you're liking right now. Kraken Robotics, what are you liking with that?
Yeah, no, this is a case where, the stock trades around 8.5. I think the average analyst is about 6.5 in the stock. And so what is really missing from the story from the analyst point of view is just what the upside looks like. And this is a defense-related stock, which is a real rarity in Canada. And they produce, they're known for the batteries in what they call UUVs, which are unmanned underwater vehicles, essentially underwater drones. And they are the leading supplier of this in the world, really. And so they're tied to Anduril in the States, which is a big defense contractor there that's a disruptor within the defense space. And they've recently launched a product in Australia with Anduril, which is called the Ghost, I forget the name of the Ghost ship, but Ghost Shark it is. And that's a sign of what they can do in the short term. But what's exciting about the stock is that Canada is going to be investing another $82 billion in its defense budget this year. And on top of that, Canada's recently joined the EU's Safe Defense Procurement Program, which has about $240 billion to invest. And Kraken is an obvious beneficiary of that.
All right, we almost out of time. I want to get in TrueLeave quickly. Cannabis, I think it's just kind of gone over into the corner somewhere, hasn't it?
Yeah, no one ever talks about cannabis anymore. It's no longer of interest to retail investors, and it's certainly not interesting to institutional investors. And sometimes you can get oversized returns based on that. And what's interesting about the cannabis space right now is that in the middle of December, Trump signed an executive order that instructed the Attorney General in the states to reschedule cannabis from Schedule 1 to Schedule 3. That'll have profound changes in the sector. And so when the Attorney General gets around to executing that, which could be any day now, you'll see a pop in the stock and the whole sector. And we think TrueLeaf is the best of the cannabis names out there for those that bother to focus on fundamentals.
Okay, we have to wrap it up there, but Jerome, thanks as always for joining us.
Thanks for having me.
Jerome Haas is partner at Lightwater Partners. Coming up, we're going to find out why Delta Airlines shares are falling and whether the broader aviation industry is well positioned. Stay with us. Well, shares of Delta Airlines are under pressure after the company made a profit growth forecast that fell short of Wall Street estimates. These shares are trading lower now, despite Delta's CEO saying that robust travel demand, especially at the high end of the market, could boost the company's shares to a record high. They're down right now. You can see 1.9%. For more on this, let's bring in Stephen Trent, independent aviation specialist. Stephen, thanks as always for joining us.
Thank you for having me.
What number is the most concerning to you on what we're seeing in the report?
Yeah, look, I don't think any specific red flag came out of this. I think with the guidance for 2026, they were in the lower end, let's say, to some degree, calling out economic uncertainty. But I would say from a broader industry perspective, the lower end of the totem pole, U.S. consumer would be the place to watch. How does main cabin develop? Do we see some of the M&A out there coming through to fruition? If we happen to get this 10% cap on credit card interest rates, that's something that ostensibly would be worse for the lower end consumer versus wealthier consumers at Delta, American, or United Airlines. So maybe that would, from an industry perspective, be the place to watch.
Okay, for Delta, with the main cabins, how important is it that they are full as opposed to first and business?
Yeah, so Delta derives the majority of its revenue from outside the main cabin, so far more important what we're seeing on international first business class and the loyalty and co-branded card. Main cabin wise, can these businesses, let's say in basic economy, withstand relatively low yields? Absolutely they can, because it's a very small number of seats. So I don't think it's particularly a big problem for the big three. I'd actually still be worrying more about the lower end of the market on the ultra low cost carrier side of the fence.
And who are some of those that people should be paying attention to, do you think?
Well, definitely in that segment, Spirit Airlines front and center. They've certainly had challenges with respect to the latest Chapter 11 filing. Maybe they don't merge. But if you look at not just Spirit, the ULCCs generally, everyone is trying to be more like Delta, American, United, talking business class cabins. Some carriers out there trying to launch more international. They're trying to launch premium lounges at airports. So there is, I would say, clearly a move away from that model because it's not making money.
Could we see some, you're talking about mergers and acquisitions, could we see some of maybe the big three picking up one of the lower cost ones?
So that in itself might be a little bit challenging for the big three, not only because of business model differences, but also because of their pretty large scale as it is in the domestic market. But certainly, you've seen the on again, off again. Frontier looks like it's out there courting Spirit Airlines. There was some news, of course, coming from Allegiant and Sun Country, for example. you could even carry this more broadly in North America, south of the border. Volaris and Viva Aerobus in Mexico may be doing the same. So I think if there's M&A in the space, it's going to be outside of the network airlines.
Would Canada play in that at all? A company like WestJet, something like that?
Never say never. I think once you start to get into potential international cross-border type transactions, it gets a bit more complex. But I would say it's certainly the one very dominant network carrier in Canada. All else equal, would have at least some of the same challenges in going after a big acquisition on its own, for example.
Okay, and then the other one you mentioned about the credit cards with President Trump saying he wants to put that 10% cap on for the year. It likely won't go through, but what would happen if it did?
Yeah, great question. So I think that is a huge if. I think there seem to be a lot of steps that would have to occur for that thing to go through here. But let's say that it did. All else equal, I'm kind of putting on my banking hat there, but I think there's a possibility that lower end consumers would have trouble getting credit. Maybe some of these people would have to go to riskier areas of the market to try and obtain credit, potentially at higher rates, more onerous requirements on loans and that sort of thing. All else equal, wealthier consumers may or may not be as much as an issue, might not be much of an issue. And if you look at the U.S. big three, Delta, American, United Airlines, their co-branded card holders are in that wealthier segment that probably are going to be, relatively insulated from this, assuming that it even happens, which I would say is a huge if at this very, very early stage.
And just bringing it back to Delta, one of the things mentioned by the CEO, I believe it was the CEO that specifically on some of the travelers, Canada and China were having an impact on the bottom line. Just how much of an effect, or have you seen how much of an effect they are having on that?
Yeah, look, I think that is an important topic when we move forward. If you look at the U.S. big three international flow, 80 some odd percent of it is U.S. originating, but there's still a meaningful portion of that flow that comes from outside the United States. So if one does look at what kind of risk we have in, let's say, the possibility that inbound international travel gets worse, that's absolutely something to watch. And of the big three, United Airlines has the highest international exposure. Delta in the middle. American Airlines of the trio has the lowest level of international. Absolutely, it's something to watch. And I would say, certainly the Chinese traffic flow may be a little less concerning just because we're still way off pre-pandemic levels and probably not a huge expectation for that to come back to pre-pandemic levels. The Canadian flow is a different story.
Okay, we'll have to wrap it up there, but Stephen, thanks as always for joining us. Appreciate it.
My pleasure.
Stephen Trent is an independent aviation specialist. Coming up, today's market drivers with Bloomberg's Monique Molina. Some of today's market movers. We are joined now by Bloomberg Equities reporter Monique Molina. Monique, thanks as always for joining us. First up, lots happening with the energy stocks right now.
Hi, yes, thanks for having me. So like you mentioned, there's a lot going on with the energy stocks today. We're seeing some of the majors like Chevron, Exxon, and some of the oil field services like Halliburton also rising this morning. And this is because of a lot of the geopolitical uncertainty that's happening right now. The U.S. canceled the meetings that it had with Iran and said that it's also going to put a 25% tariff on countries that are doing business with Iran. And as a result of this is lifting oil prices. We saw oil hit the highest highest price in 2 months, and that's what's also lifting these oil stocks. Iran is the fourth largest oil producer in OPEC, so any disruptions to their oil production, whether that's from the ongoing protests or from the U.S.'s actions towards Iran, that is going to bode potentially positive for some of the producers outside of the country. So that's why we're seeing all of these energy stocks really getting a boost today. And that's also continuing some of the momentum they've had over the past week, also seeing that boost from the geopolitical uncertainty out of Venezuela.
All right, we're going to stay with energy and Centerpoint getting a boost.
Yes, so Centerpoint, they were upgraded today at BMO. The analysts there really see a lot of growth potential for this company. They're in the utility space, but they say that they're a lot lower risk compared to some of their peers. There's been a lot of pressure recently on utilities companies around affordability and some of the politics surrounding that. And they say that Centerpoint has less of that risk compared to some of its peers. The places where they're operating aren't seeing these same concerns, and they've also been able to lock in some of their rates for years ahead of time. So they're really seeing more opportunities for growth. They do note that the stock is currently trading at a premium, but they say that they see that as being justified because they have some more guarantees compared to some of the other utility companies.
Okay, and lithium stocks are looking good right now. Any particular ones that are standing out?
Yes, so the lithium stocks are rising today. They've been getting a boost recently as lithium prices have really been rallying. But two that are particularly standing out are SQM and Lithium Argentina. Both of these companies were upgraded today at Deutsche Bank. As analysts there really see more opportunities for growth as those lithium prices continue to rise. For SQM, they also see some of the overhang they had from their joint venture with Codelco being removed now, and they see the opportunity for production to actually rise out of that, so they see more upside going forward. And for Lithium Argentina, they say that they've been really strong on execution and on costs, and they see more opportunities for them as well going forward.
Okay, and we're going to sneak in one more, Concentrix going the other way.
Yes, so Concentrix, they reported their fourth quarter earnings today. And while their earnings were in line for the quarter, they also gave their full year forecast, and the forecast came in lower than analysts were expecting, and that's why we're seeing that pressure on shares today. The company's had some pressure on their margins, and that's what's weighing on part of that forecast. And analysts are also saying they really want to see this technology company incorporate more artificial intelligence that could help to reduce their costs and also help potentially boost sales compared to some of their competitors. So that's where the focus really is going forward for 2026.
All right, we'll leave it there. Monique, thank you. As always, Bloomberg's Monique Malima. Well, the Prime Minister is heading to China later today, and we're getting more details on some of the discussions that might be on the table. Boy, oh boy, there's some interesting discussions. BNN Bloomberg's Lindsay Biscaya joins us to tell us more about them. Oh, that came out of the blue, didn't it?
It did, yeah. So we've got some interesting new developments. This is Bloomberg News reporting this. And it did come out of the blue. This is getting very fascinating. Apparently, according to Bloomberg, China will propose easing some restrictions on Canadian canola products if Mark Carney agrees to kind of ease those tariffs that Canada has on Chinese-made electric vehicles. So currently at the moment, Canada has 100% tariffs on EVs made in China and 25% on steel and aluminum. In retaliation to that, China has 75% tariffs on canola seed and a 100% tariff on canola oil. Canola, huge sector of the agricultural sector here in Canada. We export almost the most of it in the world, and China is one of our biggest importers of canola oil. So the idea that this could even be on the table with this conversation that Mark Carney is going to be having with Xi Jinping over the next couple of days when he flies to China is incredible. And we know the Canadian government is hoping to make progress on easing some of these trade tensions, but they have been downplaying any fast moves on EV tariffs in particular, because this will be incredibly contentious when you bring the U.S. into things as well. Of course, the U.S. also has major tariffs on Chinese-made electric vehicles. They actually pressured Canada and Mexico to do the same.
We're matching there, right? We have the same.
We're matching? Yeah. Oh, you know what? The U.S., I think, has 125% tariffs on electric vehicles. We have 100. I believe Mexico is 50%, or they upped it to 75. I'd have to check those numbers. But this is very important to the U.S. They want us and Mexico to have tariffs on electric-made vehicles coming out of China, and particularly when you think about these trade negotiations we're going into with the U.S. and Mexico later this year, this is going to be something Mark Carney is going to have to think about very carefully. He's going to be walking quite the tightrope.
Well, and it makes it interesting because we had Ontario Premier Doug Ford talking about Chinese vehicles being made down in Mexico, that they were just kind of branding as that. This this is a political hot potato, isn't it?
Yeah, this is going to be really interesting to see what exactly happens here. Of course, this is all reports. We know that Canada kind of wanted to direct the conversation, or we heard Canada wanted to direct the conversation to oil as well. But when you think about the next couple of days, like, this is a sign of the times, what Mark Carney is doing. He's going from country to country, trying to diversify trade, right? Starting in the BC coastal meetings today in Prince Rupert, then heading to China, Switzerland, then India in February. But this trip to Prince Rupert is apparently supposed to be incredibly important as well, because obviously with everything going on in Venezuela, China was the biggest importer of Venezuelan oil. Now Canada looking to maybe pitch themselves as an alternative when it comes to oil for China. And I know we were speaking with Brianne Gardner earlier today from Raymond James. She was talking about just how important this trip to Prince Rupert is ahead of going to China, because Prince Rupert is actually Canada's quickest route to Asia. Here's more on what she had to say.
The Prince Rupert and increased trade potentially through Prince Rupert would benefit the rails, the ports, logistics, infrastructure, and energy adjacent industries as well. So it's not just one thing that it's opening. It is opening, expanding a lot of opportunity for Canadians and for our industry. I think longer term capital does tend to then also follow where investments are and follow policy clarity and that export certainty that we could have. So it could, again, it's a little bit of a wait and see right now. I think that is positive momentum for Canada and for our energy sector.
Canada's energy sector, obviously a big component of all of this. But I mean, we're going to have to wait and see. According to Bloomberg, officials have said Carney is expected to sign, quote, a number of documents. They haven't provided any more details other than that. But I mean, even just a couple of days ago, right, we were thinking that nothing was going to come of
Yeah,
this
they were
meeting.
just trying to get things lined up a little bit.
Exactly. And now we're seeing that maybe things could progress a little bit faster, but definitely lots of different things around the world to watch here.
Okay. All right, Lindsay, thank you as always. BNN Bloomberg's Lindsay Vizcaya. Up next, a Toronto-based startup successfully launched 10 data relay satellites over the weekend. We'll talk about what this means for Canada's space capacity after the break. CI Management is acquiring Invesco's Canadian fund business with combined total assets of about $26 billion. Under the agreement, CI will manage 100 mutual funds and exchange-traded funds currently offered by Invesco. As a result of the transaction, CI's assets under management will increase to approximately $170 billion. The transaction is expected to close in the second quarter of 2026. Shares of Maple Leaf Foods are rising today. They're up 3 3/4% right now. The packaged protein company boosted revenue in its 2026 guidance and raised dividends. The Ontario-based company is targeting mid-single-digit revenue growth in 2026, supported by its sustainable meats business, investment in core brands, and expanded U.S. distribution. Maple Leaf is also planning to increase its quarterly payouts to shareholders by 10%. Prime Minister Mark Carney is meeting with coastal First Nations in British Columbia today to discuss major projects. The president of the coastal First Nations has said there is no support among the group for a pipeline or a lifting of the oil tanker moratorium. This comes ahead of Carney's departure for China, where he aims to boost engagement on trade, energy, agriculture, and international security. And looking at the markets, the TSX, it's holding on right now. It's pretty much a wash, up 0.01%. And south of the border, started out in the green. The Nasdaq's bound. No, it's back down. Nope, it's back up in the green again. Look at how this is how close it is right now. S&P 500, they're digesting the inflation data there. S&P's off by 0.16. Dow Jones down by 0.62, and the Nasdaq right now is a wash. Well, Toronto-based startup Kepler Communications launched 10 optical data relay satellites over the weekend. The company's relay network enables data processing and analyzing directly in space. Here to talk about it is Mina Mitri, the CEO of Kepler Communications. Mina, thank you very much for joining us.
Thanks for having me.
Just quickly, let's talk a little bit more about what these satellites will actually do.
Yeah, so these satellites, they'll go up into low Earth orbit, which is roughly 650 kilometers from the surface of the Earth, and they'll be able to route data between themselves, between third-party assets in real time. And so the big difference that we're bringing to the world right now is the ability for this data to come back in real time, so it can help everything from first responders get access to wildfire detection information so they can effectively manage and deploy the resources, all the way through to defense organizations who want to do in-orbit processing so they can better understand, what is their situational awareness so they could do intelligence, surveillance, and reconnaissance all around the world.
And when you talk about real, like, is it literally instantaneous, the information?
That's right, yeah. So the norm for most space missions today, it might take them 30 minutes to 3 hours to get information back down to Earth, where when we bring up this network and it's fully operational, data will be flowing at 700 milliseconds. So it's as instantaneous as information gets exchanged on the traditional internet we have here on Earth.
And how is that possible? Is this technology you've developed?
So this is the advent or a confluence of few technologies that have come into existence and stuff that we've developed in-house. So the core enabler to the work that we're doing today are laser links that we're using to beam light between different satellites within our network and to third-party satellites and eventually back down to the ground. So building off the momentum we had in 2023, where we tested these laser links that are able to communicate with an aircraft, with another spacecraft, or with the ground, we're able to move this data in through space, much like a mesh network here on Earth, so that it eventually finds its way back down to Earth in real time. That's the real core enabler. And apart from that, it's also the great satellite capability and satellite building capability we've developed here in Toronto in our factory.
And you literally are these lasers? You're actually, the information is in the laser itself, in the beam?
Yeah, you got it. So the laser beam is very much like fiber optic cable here on Earth, but in space, because we've got the void of space and it's a deep, dark vacuum, we can shine lasers between our satellites without needing a physical cable to connect them between one another. It's a really hard problem, though, to solve because we're pointing a laser pointer to an object that's roughly the size of a quarter, sitting 6,500 kilometers away, and we have to hold that laser pointer steady. So that's the core intellectual property that we've developed here inside the business, is how do you build, deploy, and operate a satellite that can hold that laser pointer or that laser marker really, really still.
And now you've got 10 up in space. Are you making money off these now?
Yeah, we are. So we are live deploying applications with a few of our marquee customers. Yesterday, we announced one of our key customers, a company out of Germany called Aurora Tech, where we are supporting them to do live wildfire detection and wildfire monitoring. That has a ton of applications, especially with the big wildfire season we experienced last year here in Canada. And it services national and international governments with the same. We also have a few orbital data center customers. So on board all of our satellites are a wide series of GPUs and CPUs that are used for doing on-orbit processing that allows, financial institutions and other government type customers to be able to process and route their data in orbit for using of that orbital data center. So we have a number of different use cases and applications, and we'll be continuing to announce them over the coming months.
Now, are these the data centers that Elon Musk has talked about, the space data centers? I mean, they're not very big, these satellites, but how much information can you store up there?
Yeah, so these satellites are roughly 300 kilograms in mass, or 600 pounds. Those are pretty beefy spacecraft when you think about them. They're also operating in a sun-synchronous orbit that is dawn-dusk. So when you hear a lot of the mainstream media communication today, the dawn-dusk orbit is really an orbit that has a ton of sunlight in it, which allows us to generate an enormous amount of power, but also keep our satellites a little bit smaller relative to what an end data center might look like. The key advantage here is these data centers are all networked to one another, so we can distribute compute resources between all of our different satellites when a workload comes in. So if somebody needs something to be operated in space, we'll decide which of the satellites will run that workload, and we have many, many different GPUs across all these satellites that are real-time connected to allow us to run those workloads.
Okay, and now you raised $200 million, I believe was the number, or close to that. Where are you looking for another? Are you looking for more funds, or are you thinking of an IPO?
Yeah, we've raised over 300 million US in capital to date, and we have had the benefit of really supportive investors throughout this time period. We'll be continuing to raise additional capital through the coming year, just on the basis of expanding our network, adding additional data sources, and really building out what we think is the first of its kind of a cloud-like environment where new space missions can be developed, deployed, and run instantaneously.
And do you see yourself going public?
In the long-term future, I think we see a lot of private companies staying private more so these days with ready access to private investors, the ability for them to really focus on and concentrate on their core mission and their core differentiator without the public markets really challenging the work that they're doing. So, we'll keep the company private for as long as we can.
And just one last question with government talking about defense and spending increasing. Where do you see yourself fitting in with that?
Yeah, so defense really, really cares about the ability for them to get access to real-time information. So if you think about any conflict that they're in, the latency that information has dramatic impacts on their operations. So some of the upcoming applications we'll be talking about include real-time access to intelligence, surveillance, and reconnaissance data that allows these government organizations to get their same data sets that they're used to using in operations, but deliver to them in real time so that they can better improve the totality of their operations. The uptick in defense spending has been a huge tailwind for us, especially in Canada and in the international markets that are looking for real-time access to data.
And one last thing, is there any other companies that are offering real time? Do you have any competition right now?
In the real-time data marketplace, there's not a whole lot of companies that are offering their data sets in real time. The majority of companies today focus on the traditional way of getting their data back, which is downlinking it to a ground site, which might take anywhere from 30 minutes to 3 hours. So we see ourselves pretty differentiated out there in the market.
Okay, we'll wrap it up there. Mina, thank you very much for joining us.
Yeah, thanks for having me on.
Mina Mitri is the CEO of Kepler Communications. Coming up, JP Morgan has released its fourth quarter and full year 2025 financial results. We'll get more on that when we come back. U.S. earnings season kicked off this morning with fourth quarter results from JP Morgan. The bank had a decent EPS beat, but investment banking was disappointing. For more on this, we were joined earlier by Stephen Bigger, Director of Financial Services Research at Argus Research.
The investment banking results were a bit weaker than expected. There's been this multi-quarter narrative about how constructive the capital markets environment has been. So this could have been some timing. You have to close deals in the quarter in order to book those revenues, and some of that could get extended into 2026. We're still looking for this extended upturn, and the constructive commentary they did mention on the conference call this morning. The backlog is growing. You think you've got lower interest rates, you've got improving CEO confidence and boardroom confidence. You've got this pent-up backlog after kind of a weak 3-year period. You've got more relaxed regulatory framework, and all that really bodes well for the both the IPO and the M&A activity for banks with large capital markets operations.
JP Morgan, though, rolling up its sleeves for a fight, it seems, over any attempt to cap interest rates on credit cards. The CFO saying we'd have to significantly change our card businesses and that everything is on the table in pushing back.
Well, it sure is. Yeah, I think we'll see a very strong response by the industry here, as well as the industry advocates in this space. It's very difficult to when you kind of mess with this with a bank's ability to price risk and only just kind of this one part of the equation, the interest rate. Bad things tend to happen. Whether it's the removal of credit availability, which is very much a disservice to consumers. You put extra risk in the system from not being able to cover credit losses adequately. We saw this in the financial crisis, where in the case of home lending in that era, where you make loans too easy to get and fuel speculation. You get bubbles and then a collapse in the very asset you're trying to help. So it's important to be careful here, I think, and take some time. And I don't think that is kind of inherent in the president's 10-day implementation period here. It's guardrails are very important, but it can be, over-regulation can be just as detrimental as under-regulation or poor regulation.
It's interesting, the stock up more than 30% in the past year. According to Bloomberg, though, there are 19 buys among analysts, but 12 holds and 3 sells. So it sounds like Wall Street not convinced that there's going to be big gains in the near term anyway for the shares.
Well, as much as the narrative on profit growth, I think, is intact. If you ask all or most of those analysts, they would say, look, it's going to likely be a good year for profits for JP Morgan. So the question is about valuation. Has that 30% gain we've seen, is that kind of take into account the expectation of continued improvement in 2026? And I would say, this is kind of a unique time for banks, particularly the large and the global banks, where this a bit of a re-rating is going on. Not only do they have this long runway, we think, of improvement in capital markets, and that is a big wild card in terms of revenues and profits for banks. So that extended upturn could lead to valuation improvement. We also have this kind of generational change in regulatory, right? Ever since the financial crisis, it's been nothing but more and greater regulation, more compliance costs, and all this to satisfy regulators. And we think we're in a period now where that is at a minimum going to stay steady and maybe even more likely soften a bit in terms of capital requirements. So that helps free up capital for lending and other uses, for buybacks, for dividends, and so forth. So I think we're going to have, if you think about the banking industry and kind of how it's evolved, and these stocks are not terribly expensive either, kind of 13 to 15 times are the 26 consensus estimates. So I think there is some more room. I don't expect 30% gains out of these large bank stocks, but and they have outperformed the market the last 2 years running. So this will be a third year. That's a little difficult. But again, I think the momentum is behind the profit story, and the re-rating does help those multiples.
I suppose one thing that could inflate their earnings would be a whole pile of initial public offerings and takeovers in the tech space fueled by AI.
Well, definitely. Certainly if you think about M&A and global announced M&A deal value is up 40% in 2025. So again, a lot of pent-up demand there. It's this boardroom confidence, the competitive pressures to cut costs, the more favorable regulatory environment I mentioned. All of that can add to deal demand. And there's been a lot of these mega deals, especially, definitely in vogue now with. You think about scale across technology or the financial sector, industrials. Falling interest rates obviously is helping on the financing front. We've got very banks that are willing and able to lend. We've got a market that's willing and able to accept new equity, new debt issuance. We had $95 billion of investment grade debt issuance in the first week of January. So that's the highest level since the pandemic. Credit spreads are around 15-year lows. So that's very good for debt issuance. And so the market is, I think, is waiting for that, and is helpful in terms of making financing available. So.
And he was speaking with Stephen Bigger, Director of Financial Services Research at Argus Research. Coming up, we'll check in on the markets on Bay and Wall Street. Market Call is coming up next, and today on the show we will have Gordon Reid. He is President and CEO of Good Reid Investment Counsel. We'll be taking your questions on U.S. equities. And let's take a look at the markets, see how they're faring, Bay Street and Wall Street. First up, Bay Street still in the green. It's hanging on right now. It's up 0.18%. One of the movers today is Maple Leaf Foods. Let's bring that one up and see how it's doing right now. It's up about 4% right now. So on the news from Maple Leaf that it's raising its quarterly dividend, it expects a mid-single-digit increase in revenue for fiscal 2026 compared with 2025. The company says its adjusted EBITDA is expected to be between $520 million and $540 million. Maple Leaf also planning to spend about $170 million on maintenance, productivity improvements, and automation, and says it's raising its quarterly dividend by approximately 10% from 19 to 21 cents. And just taking a look at some of the indices, who's winning here right now quickly. Energy index up on the TSX right now. They're leading the way, materials as well. Moving down to the U.S. markets, the S&P 500 pretty much a wash right now. And when you look at the Dow Jones, it's off by about 0.6%. And up the other way is the NASDAQ. It is at 0.31%. Everyone's sitting in and around near record territory. And one of the companies we're talking about today was Delta. And you can see it's still off about 3.35% right now on its profit forecast that fell short of Wall Street estimates, with the major U.S. airline taking a more cautious view for 2026, calling 2025 a volatile year. Shares in the Atlanta-based Delta are off for today, and it's the first major U.S. airline to report earnings. So could be, as Delta goes, the rest of the industry goes. We shall see as we hear the rest of them report. And that is it for Morning Markets. Thanks for watching. We'll see you back here tomorrow.